Hello, everyone, and hello, Conrad. Nice to see you here at the London MoneyLive conference. How are you?
I'm very good, thank you.
Knowing your experience, knowing what things you're doing, and based on everything what you did in your career path, also the trends currently are that a lot of neobanks appears, fintech companies, products appears, and a lot of banks, challenging banks, they just reshaping the market. And what you'll define the success key for those challenging banks that succeeded and they did prove that they are very strong in the market with those who didn't? What was the key success? What do you think is important for them?
Well, in the early days, I think it's around focusing on a real customer problem. So you look at the early days of Revolut, for example, the problem that they solved was that you had many people actually typically come across to London from many parts of Europe. Pre-Brexit, this was. Firstly, these could be really successful software developers, etc. They would struggle to get access to banking services. And then also when they move their money internationally, as you do if you're internationally mobile, they were going to be ripped off with fees. So it was a deep problem. It was one where there's lots of virality. In other words, you had unhappy people telling their unhappy friends and suggesting it. So Allica is another good example, my own organization. So SMEs, large SMEs in the UK are typically very unhappy with the big banks because the big banks neglect them. So we kind of focused on solving what they find really, really problematic. So in the early days, it's really about, are you solving a real customer problem? After that, it's all about execution.
During a scaling, for example, in case of a bank, what operational complexities scaling banks are meeting and how they are working dealing with this?
Yeah, so if you're scaling very rapidly, and Allica, remains the fastest growing fintech in revenue terms the UK has produced so far. Above all else, it's around organizational design and culture. So let me break down both of those things. So firstly, if all decisions go through the people at the top, what Jeff Bezos famously called the hippo, the highest paid person's opinion, then very quickly you at the top of the organization becomes a bottleneck. So you need an organizational design which is built around small teams that are empowered and have a very clear idea of what their objective is, what they're set out to do. So organizational design really matters. Very few organizations globally have solved the problem of massive scaling without becoming the big corporate that we don't want to become. So organizational design is really important, but probably most important is culture. I mean, actually, Allica is the third time I've been involved in one of Europe's fastest growing companies. So I've done this before. One of the things you learn is that you get to a certain scale as a business, then culture becomes so important because culture is what happens when you're not in the room. And guess what? When you've got 800 people, I'm very rarely in the room when decisions are being made. So it's around making sure that you relentlessly and ruthlessly hire for people who share your values. It's obviously around stuff like integrity and collaboration, but also around execution, around speed. You need people who basically are your organizational DNA. That's how you scale a business. And you'd be surprised how much time a leader at Allica will spend on attracting and retaining the best talent. Because in the end, you can't build an exceptional business without exceptional people.
Scaling over time comes with innovation. Most of the times comes with innovation. And how is to balance between innovations and regulatory and compliance? How to find the golden middle here?
Yeah, I mean, I'd say that's one of the superpowers of a great fintech. We're a UK regulated bank. UK bank regulation is considered one of the gold standards. It's a very, very high bar to get a UK bank license.
Yes.
And there's very low tolerance to lack of compliance. Compliance is not optional. How we think about this really is trying to get to the first principles of what the regulator is trying to achieve. So for example, famously in the UK, we have a regulation that called the senior managers regime. It basically makes individuals accountable who run banks. So in other words, you're individually accountable when something goes wrong on your watch. It was brought in after the global financial crisis for obvious reasons, because lots of things went wrong. Yes. Well, actually, traditional financial institutions still make decisions through committee after committee. And when something goes wrong, it's very hard to know who's responsible.
Yes.
But it's actually very slow to do things through committee, and it doesn't reduce risk. I would actually make the case that it increases risk. So accountability is really important to us. If you build an institution around what the customer wants, around better value, so we're not taking advantage of apathy, ignorance amongst customers, for example, in value. If you're building for what is right for the customer, you're going to grow your customer base, but at the same time, you're unlikely to fall foul of regulation. So, a lot of regulation, certainly on conduct side, can be like, what I always used to say in my old organization, would you be embarrassed to tell your grandmother what you did during the week? If you'd be embarrassed, it's probably against the regulation. If you build a business that's customer focused, you're largely most of the way there.
A lot of innovations are coming from fintech companies, but they don't have a license, a banking license, or they don't have an AMI license. They're just a classical technical vendor.
Yeah.
A lot of innovations are happening there. They try to invest money, to find money from investors. And when they succeed, they start to search for partnership with a bank. And when they find a partnership with a bank, this partnership starts to build, to scale up, and so on. So from your perspective, what is the key success for a fintech to have a strong and good collaboration with a bank?
Yeah, I mean, firstly, I spend a lot of time with fintech startup founders who are doing sort of enterprise B2B. And one of the things I always try and sort of get their heads around, which is that if you're a small fintech, you have almost unlimited upside.
Yes.
Yeah. And very little downside. In other words, you have very little on the line because you're an early stage business. The world looks extremely different to an incumbent. If things go horribly wrong, they can go extremely wrong, all the way down to being, told you can no longer trade by your regulator. Or if you're a middle manager making a buying decision, you're the one that's going to get fired. Upsides for that middle manager, they might get an extra 10% of their bonus if they do something amazing with your technology. You need to really be sympathetic to that. Also, you'll find large enterprises are quite naive about how quickly they can do stuff. If they tell you it's going to happen in 2 quarters, double it, yeah, and you're more likely to be there. You really need to battle hard yourself for that. Have you got enough runway? Have you personally got enough patience and resilience for that? And in the end, it's about coming to a position where you have a strong pipeline, which basically means that the delayed deals that are 6 months overdue are suddenly landing when the new ones are getting delayed, inevitably as they do. So I think understanding that they are very different organizations and they're coming from a different position, I think is really important in the fintech community. In terms of constituents, good partnership, I always try and get deep. When I think about partnering with a vendor of any kind, I want to understand how in a 3 to 5 year timeline, our incentives, our goals are going to be really well aligned. So for example, if I'm working with a really big vendor, I'm not going to be an important client to them, right? A big bank will be an important client to them. But if I turn out to be a referenceable case study, and guess what, everyone's watching what Allica's doing, then I can be of value to them. So how do you create that alignment such that as you go through the bumps and the inevitable roller coasters of a relationship, you kind of stay glued together because you're kind of like really excited about a bigger picture goal? I think that's super important. And people get stuck in the transactional reality. In the end, what makes a successful partnership is that over time you guys converge and you have a really strong incentive to stay together. A bit like a marriage.
Yeah. And speaking about the marriage, a long-time marriage, and speaking about the pipeline you also mentioned, what is the vision for digital banking in the next 5 years, 7 years? How it will look?
Yeah, well, look, this is not an Allica answer. I often get called a fintech veteran because I before Allica, I founded one of London's earlier fintech businesses. What I'm personally very intellectually interested in, I'm not going to say the obvious answer of AI. I'm very interested in that. I'm very interested in stablecoins. I used to work in the city many years ago. And it's just extraordinary how much wasted effort there is and highly paid people reconciling stuff, finding mismatches, and because there's stuff that's in transit, etc. We've now got this new technology, which is instantaneous, 24/7, immutable smart contracts. It could potentially transform financial services. And I think the next generation of digital banks, not necessarily in our segment, but in other areas of the market, they're going to be native to this kind of new rails, new infrastructure. What I always say is you think about the first generation digital banks, the ones that came before us. I call them lipstick on a pig. They were really cool UX, mobile UX, but on traditional payment rails, which everyone else uses. I think we're going to see the back end, the infrastructure is going to get reworked over the coming years. And it's going to allow some really exciting use cases.
And the last question, speaking about the stable coins, speaking about the smart contracts, if, as you said, this switch from old to new one, it will implicate some new regulations. How do you think, the government itself, not specifically in the UK, around Europe, around the world, they will be in time with these innovations? They will accept smart contracts as a part of KYC, as a part of settlements and so on. Do you think it will be an easy transformation, an easy transition or not?
It certainly won't be easy. I would observe that the US, which has got the Genius Act, which is their major piece of crypto regulations, fairly new act. I think it's signed into law this year, actually. But certainly in the last few months, it's a pretty intelligent piece of regulation or statute. And I personally don't see any obvious reason why you wouldn't use that as a kind of like first principle. If I was let's say I was a politician, challenger, and regulators here in Europe, I'd be saying, don't from scratch try and build a regulation. Give me very specific reasons why we shouldn't copy exactly what they've done in the US. And that will kind of get the debate around the things that need to be tweaked rather than the fundamentals. But fundamentally, I would love for the European fintech industry to get on top of this stuff because we don't want to lose our fintech crown to other jurisdictions which are moving quicker on this.
Thank you very much for this short intervention. Wish you a lot of success for you and for your company, and good luck.
Thank you.